Light is Britain's far-right conspiracy theory paper spreading hate and vicious lies. No, that's what the BBC say. The Light is the only national newspaper bringing you the real news and informed opinion on what's really going on today. You can subscribe, order copies, submit articles, and read back issues on our website, thelightpaper.co.uk, and see for yourself why the establishment are so worried about the uncensored truth getting out to people every month. The Light Paper. Not far right, just right so far. Thelightpaper.co.uk.
Scene script. Have you ever pondered the idea of financial independence and early retirement? The notion of not having to clock in at 9 or wrestle with the daily grind? Imagine a life where you're not shackled by financial obligations or a demanding job. It's not an impossible dream, but a reality for those who embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Right, good afternoon guys. It is 12:22 on Monday, the 17th of November 2025. That means we have completed 3 years and 33 weeks of this roughly 8-year FIRE journey, FIRE experiment if you like. Before we go any further, let's have a look and see where the market is sitting at present. So currently the Vanguard S&P 500 exchange traded fund, seen here on the London Stock Exchange, is trading at 97 pounds and 4p near enough. It's down 1/3% today. And in terms of our actual portfolio, the portfolio value is sitting at 30,200. The return on investment to date is sitting at 33%. And currently we have 311 shares in the portfolio, with an average purchase price of 72.84. Now obviously that price is well below where the market is currently, and that's just simply due to the length of time that this financial experiment has been ongoing, and I suppose indicative of the fact that the market has generally been rising despite a couple of blips along the way. Let's have a little look at the notifications. So not much to say here. Micron Technology up 5% on report that Samsung has aggressively hiked memory chip prices. Biggest stocks before earnings: Quantum Computing, XPeng, Jinko Solar, Luckin Coffee, and Neo Technologies. Now, it's quite some time ago. I, for whatever reason, had decided to buy some shares in Luckin Coffee, and I forget what had happened, whether there was some sort of an issue that led to them being delisted or what exactly it was, but I lost money on those. So sorry to say, but me and Luckin Coffee are finished. I'll not be investing in them, at least not directly, again anytime soon. With that said, let me just draw your attention to Monzo.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
Oh.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up, how'd you get on?
It's a draw.
Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
We can go now.
Rude. You make Monzo Monzo.
Okay, so as was noted on screen there are affiliate links in the description. Currently, those include affiliate links to join Trading 212, one for Monzo, the bank, and finally another one for Smarty Mobile. So as you would imagine with most affiliate links, there would be some benefit to me if you chose to use those to sign up with each of those companies. Whilst I have included an affiliate link for Trading 212, I would strongly encourage people not to use that unless you have done your due diligence, unless you have researched into investing and you understand the risks that go along with that, and the very real possibility that you could get back less than you invested. And as I've already said, I had invested in Luckin Coffee at one point, thankfully not to any great extent, but as a result of something which, as far as I'm aware, was unforeseeable, I ended up losing some money on Luckin Coffee. Now, it wasn't make or break style money, thankfully, but nevertheless, just a note of caution. Please do not take up the offer in the affiliate link simply with the intention of getting some free shares, because in fact, to avail of that offer, you do have to invest, and as I say, investing is not risk free. So you really do need to understand the risks, and you do need to feel comfortable with them. And I would say, please also do not do not use that affiliate link unless you've already done your research into the different trading platforms. You've already decided that Trading 212 is the one that you would like to use. And you would have been going to open an account anyway. So if you tick all those boxes, then I would say yes, okay. If you are happy that you understand the risks, if you are satisfied that Trading 212 is the platform that you prefer out of all the various offers, and if you were going to be opening an account in your own right anyway, then at that stage, if you have answered yes to all of those, then I would say yes, please go ahead and make use of my affiliate link, and may we both be fortunate in the allocation of free shares. Okay, enough said about all that. Let's get on and do this week's investment. So if you have been watching the channel, or if you watch the channel occasionally, you should know that each week I buy £120 worth of the S&P 500 exchange traded fund. I normally do the purchases on the open market. As you can see, since we started the broadcast today, the market has dipped ever so slightly more than it had to begin with. So down now 0.2%. So as I say, it's £120 we're putting into the market. It's going to buy us roughly 1.2 shares. We will send that through as a market buy. There is no commission, and we got immediate execution there, and we were able to buy 1.23 shares for 96.95. Just looking at the totals on the right hand side here, so the figures have updated. The new portfolio value stands at 30,300. The return on investment just under 33%. And we now have 312.5 shares in the portfolio. Average purchase price now up to 72.93. So the journey continues. Perhaps before I leave you guys today, I'll just point out a couple of the features on the graph that you see here. So way back here, it's probably difficult to make out, but that is February 2020. And there's March 2020. I don't know if we can highlight that. No, we can't. But that was COVID. So the market took a bit of a nosedive. It was a lot more significant looking at the time because it was starting from a lower point. So it was more significant then. But the market took a nosedive for roughly a month. And then it took another 3-4 months up until about July, end of July, before it regained the ground that it had already lost before. Then the market kind of continued on its usual sort of a trend, generally upwards, but not too much. And then the Ukraine conflict began. That was characterized in the first instance by fairly high and low swings, and as time went on, the amplitude of those highs and lows got a little bit less, until such times as the market then began climbing gradually once again, and then seemed to regain a normal growth trajectory before Donald Trump's tariffs announcements, which coincide with this shoot, and that was around about mid-February. Donald Trump announced the imposition of quite staggering tariffs on some of the US's commercial competitors, and as I say, that caused this reaction in the market. Again, followed by a V-shaped recovery, kind of not dissimilar to what happened at COVID. The fall is always pretty sharp, the recovery a little bit less. And again, here we see a sharp fall, and despite the fact that it's a fairly steep recovery, it's still a little bit more prolonged than the fall. And then obviously at present, you do actually have a couple of little bits of red candlestick there, just indicating that the market is kind of fairly satisfied with that price point as a whole. There does appear to be a little bit of resistance in around that point at the present time. So as I say, that's where we're at. That's where we've been, and that really is pretty much it for this week. But I stream weekly when I can. And if you're interested in following the journey, the best thing you can do is subscribe to the channel. On the other hand, if you're particularly enthralled by this episode, why not give it a thumbs up? Yeah, as I say, that is it. I will be back again next week with more, and it just remains for me to thank you for watching and wish you a good week, and hopefully see you next week. Bye for now.